Good morning, everyone, and welcome to the European Crossover webinar and happy ECB Day. Yes, we do have the ECB today, and let's go and take a look at the economic events calendar. Just had the UK housing price index, Halifax prices. We do just now come into Italian retail sales. Eurozone employment overall final. Now that's going to be at the top of the next hour. With the Eurozone GDP revision up at the top of the hour also. Canadian building permits, that'll be at 8:30 Eastern. Of course, ECB decision right here at 7:45 Eastern. Later, whether you want to call it later in the day or the next day, Japan GDP, that's revision. But of course, the big move today is going to be ECB. And the euro is just hanging around here in a very, very tight range. We talked about that, is that, we had that story, I think it was a little earlier this week, and that this was the lowest volatility of the euro since its inception, I should say. So we've had, just no movement at all, and FX continues to be relatively tight. Even the cable's gotten a little bit quiet here, although it finally got above this trend line. It might have more to do with just time versus price, because we're bumping along here. We have pushed up a little bit higher, but not a whole lot. And obviously the big move yesterday was the Canadian dollar. And we are still staying relatively strong. We're at 34.39 right now, but we did make a move up in here. Got up in here. I thought we were going to get up around 34.56. Actually, that's where they went to, or actually just a hair above 57.5. We did ease back a bit, but not a whole lot. I mean, I would thought we'd ease back a bit, but I tell you what, you have to be careful with this dollar CAD for those who are trying to stay short. I didn't even stay in that long, playing for the short side. But when you look over time, this market is just unrelenting. Once it gets going in one direction, it just doesn't want to ease back. You can see this. It's just not very much of a pullback. And boy, you have to be careful on this one. And also with the dollar staying so strong. Peso continues to stay very strong here. This had all kinds of opportunities to go in and weaken yesterday, I thought. But if you look at it, we had moved up here past this 1930 and just kept chugging along, and it's just not slowing down. It's not, and it's not too far away from really. If we get very much past here, this thing could really turn into a screamer. When you look on here on the daily, you can see this thing. You can almost just feel like it wants to just move higher and just bust higher. Be careful with this one. It looks like it could really take off. You get this move back up in here, and the market looks a little bit tired. And maybe we're going to pair back. Well, we didn't pair back much, and look how strongly it comes back. And we're holding up. So I wouldn't want to be short this market. I guess buy it on dips. It's still a tricky market to go and trade, but be very careful. This thing really does look like it wants to move much harder. It's done some work. It did some work on this pullback here, and we've come back rather smartly. We pull back. I'm looking at the 2-hour right now, and this was pretty important here. So you get a nice turnaround. The market holds in this area, which is what it should be holding, and then from there we break out and we just keep adding on, and not nary a pullback whatsoever. And dollar index continues to stay very strong in here. We'll see how far the euro takes us. Although it would seem that a lot of this is built into the euro, so we'll have to see how it play out. The gold, remember, we've been talking about that 1280. Although we've marked 1275s at 38%, we've had a nice little smart rebound off of those lows here. Dollar yen continues to remain close to 112. And the Aussie dollar just about tagged that 70.18. You see there where we had that. We did get a little bit of a dip here in the Aussie yen. Let's go and move into the news. So, changing tack. ECB readies for more stimulus. Barely months after the formal end of its post-crisis stimulus program, with its official policy still to raise interest rates later this year, the European Central Bank will start today laying the groundwork to put the tightening on hold and instead keep policy soft. With trade tensions and Brexit dragging on the Eurozone economy, the ECB is expected to cut growth forecasts and make its strongest hint yet that fresh stimulus is coming in the form of more cheap loans available to banks. The so-called targeted longer-term refinancing operations, or TLTROs, is at the beginning of what will be broadly regarded as a policy U-turn. Not too much down the line, it will have to change its guidance and take the rate increase off the table. The bank's policy decisions are released at 12:45 GMT, with the conference scheduled for 13:30 GMT, where Mario Draghi will do his now familiar linguistic balancing act. A consensus is emerging that British Prime Minister Theresa May is going to struggle to get her Brexit deal through Parliament next week, setting the scene for a delay of the UK's departure. Talks in Brussels this week have yielded little progress, meaning her chief lawyer, Geoffrey Cox, is unavailable to change his legal warning against the Irish backstop. The last-minute breakthroughs are, of course, in the nature of the stage management of such negotiations, so one cannot be ruled out yet. But with the prospect of the UK being forced to ask for a delay, there's little interest for the European Union in changing its position right now. That's even more true if a softer Brexit becomes a possibility. A vote last night in the Lords backing the amendment to retain a customs union with the EU, while not legally binding, could facilitate its lower house moving in the same direction. Labour leader Jeremy Corbyn has said he is confident of being able to reach a cross-party consensus after talks with lawmakers who back a close Norway-style relationship with the EU. Such an outcome, however, would entail retaining freedom of movement, something that would be a hard sell to Labour leave constituencies. Onto the markets. World markets have run into a sand again overnight as Wall Street stocks down for the third straight day, and European markets in thrall to Thursday's ECB. Some reports say the ECB is about to tee up the new targeted cheap loans, TLTROs, and Italian and Spanish bank stocks have jumped and sovereign yields have fallen over the past 24 hours. Italy's 2-year bond yield fell to a 7-month low first thing Thursday. Euro dollar was steadier, holding above 113. And the 2-week low set on Wednesday. TLTROs aside, the markets will be watching for updated ECB staff economic forecasts and possibly change in guidance of interest rates. The ECB will now think that it will start raising interest rates this year, but the Federal Reserve and other central banks have already changed their guidance after the market turbulence and economic slowdown at the end of 2018. The OECD downgraded its 2019 European growth forecast on Wednesday, slashing euro area growth by 0.8 percentage points from its November outlook to just 1% this year. It now expects Italy's economy to shrink for the entire year. The gloomier outlook wasn't confined in Europe, with full year contractions in 2019, gross domestic product of more than 1% forecast for the emerging market casualties, Turkey and Argentina, where the battle lira and peso are once sliding again this week. After surging for the new year, central bank stances around the world in hopes of some trade war detente between the U.S. and China, stock markets are now scratching around for direction, have dialed back this week. Wall Street and European stock futures were in the red first thing Thursday, with Tokyo, Hong Kong, and Seoul benchmarks also down in Asia. So let's go on and move on. The Canadian dollar hit two-month lows as yield spreads widened on the dovish Bank of Canada. Canadian dollar weakened to a two-month low against its U.S. counterpart. On Wednesday, the spread widened by 2.5 basis points. Today, more dovish than expected commentary has been triggering the market again. FX side is caught up with the rate spread. Faced with slowing global and economic domestic economy, the Bank of Canada held interest rates steady as expected, and there was an increased uncertainty about the timing of future rate increases. The decline for the loonie came as data showed Canada racked up a record trade deficit in December, and the pace of purchasing activity slowed in February to its weakest in 5 months. Also, this is in regards to the Reuters poll. The Aussie and Kiwi defying gravity as rate pressures builds. Many analysts are keeping the faith with the Australian and New Zealand dollars, projecting moderate gains in coming months, even as the market is more aggressively pricing the risk of an interest rate cut in both countries. Median forecast was also for 72 cents in 6 months and 74 for a year ahead. That look seems a brave call, given the Aussie hit a 3-month low of 70.20 on Thursday in the wake of dismal data on economic growth for the December quarter. The market slowdown, combined with sliding home prices and sluggish wages to convince investors the RBA will be on course to cut rates again. And referencing yields, it says they're 90 basis below yields on comparable U.S. Treasury debt. Robert Thompson said macro rate strategist at RBC Capital said the sheer speed and scale of shift means the market may be due for a pause. A bit of exhaustion may be creeping in, with the Aussie unable to break 70.20 on the downside. We expect this to ultimately reach 66 cents, but it may take a period of consolidation before a break lower becomes possible. Probably plays in a little bit to what Blake was looking for, is in case we do get that agreement between U.S. and China, we'll see that bump up, and then from there maybe we'll wind down. Moving on to the euro as it awaits the ECB. Major currencies mostly stuck to the ranges on Thursday as leaders focused their attention on the ECB. The yen and Swiss franc edged up as investors sought shelter in the safe haven assets, and signs of tension between the U.S. and North Korea renewed fears of a slowdown in global growth. The ECB is expected to cut growth forecasts and likely to provide its strongest signal yet. Stimulus is coming in the form of cheap long-term bank loans to fight economic slowdown. The euro trod on Thursday at 13.07. The market has already been pricing in that economic growth in the Eurozone isn't good, though I think there's a likelihood there may be a chance that their forward guidance that also has been already priced to some extent, he said. The OECD, we already mentioned on that downgraded forecast. Australian and Canadian dollars hit the lowest in 2 months as investors cut back on their holdings. Bank of Canada said there was an increased uncertainty. We did go on and mention that. The new activities detected between North Korea's intercontinental ballistic missiles plant, South Korea. Media said on Thursday, President Trump said he would be very disappointed if Pyongyang rebuilt a rocket site. And lastly, we'll just mention the dollar. As far as the poll, the dollar to slip. No lift expected from any China trade deal. Now, this is a Reuters poll looking out. The U.S. dollar will slip over the coming year. According to a Reuters poll, the strategist who said a positive outcome to U.S.-China trade negotiations was already priced into their outlook and not likely to give the greenback a lift. Last year, the U.S. currency was propped up by sweeping tax cuts championed by President Trump, the economy expanding above its long-term trend for most of the year, but falling short of a 3% for 2018. Now, a slowing U.S. economy, a widening fiscal deficit, and a deficit Federal Reserve Bank Federal Reserve are limiting the dollar strength against other major currencies compared with 2018. As we pointed out at the start of this year, we see the relative cyclical support for the dollar being less favorable this year than last, and that suggests to some dollar depreciation ahead. The end of the balance sheet shrinkage will reinforce a much less active Fed on raising the Fed funds rates. In addition, there's already an evidence of foreign investors being more reluctant to invest in U.S. portfolio securities and are now viewed the risk reduced appetite as partly of a consequence of the level of U.S. dollar and partly on concerns of deteriorating budget deficit outlook. The dollar was still highly in favor for the CFTC. The dollar is expected to weaken with the euro forecast at 119 in a year. Wow, over a 5% rise to 113. But that outlook for 12 months ahead was a downgrade on the single currency against the dollar compared with last month. That is being driven by the ECB. Will do more to help the euro, and they're widely expected to slash cut rates and go with the LTRs. We're not anticipating there'll be a lot of wind in the dollar sails, said Jane Foley, with strategists with Rabobank. But if you get an environment where the market is really anticipating more TLTROs from the ECB, I don't think the euro is going to be on a firm footing. And in that environment, there's just perhaps more incentive for the dollar to remain well supportive. No huge gains, but supportive. So any resolution on ongoing trade between the U.S. and China is also unlikely to change on the fortunes of the dollar. And the dollar should correct if there's an agreement between China and U.S. due to the reduction of safe haven flows. Nevertheless, the market is already priced in the high probability of an agreement. Thus, the depreciation should be limited. So let's go move into our analysis for the day. Kind of covered with the news, kind of covered an overall perspective, which is good with the euro because, like I said, we're going into the ECB and we're wondering how much of this is already priced in. So let's go and take a look where we stand here with the euro. You know, here's the key area down here at 1219. I don't think that we're necessarily going to see this 1219 unless they go full bore on TLTRO. And even then, you could go in and see something where the market dips and then we just don't see this follow through. I don't know if it's Gregor or who it is that I think they're looking for 1170. And you know what? I kind of like that area there. The only way I think that I'm not calling for that today, but I think for us to go, we've already priced in so much. We've already come down here to this 1291. I think that the only way we can make it down here is if the market goes full TLTR. The only way that I believe that we would endure a sustained move lower is if the market, the ECB, not only goes full TLTRO, but also reduces its or changes its interest rate guidance, which I don't think they're going to do at this meeting. But they would have to go full on. And if they do that, then I think we make that move. And I don't know if it was Gregor or Steve, I don't know who the one, unless it was Stelios, was looking for 1170. There could be something to that. Here's right now I've got right there at 1150. There's 1192, right? You see this bar right here, that close? That'd be 1182, 1163. I think the only way we get down there is if they go full TLTRO and also change interest rate guidance. Then it's like you're selling it, and then what happens is we may get a little bit of exhaustion down here. That's looking if you get that more extreme case, I believe. Okay, that'd be the extreme case. Other than that, I think the market's going to have a tough time. You see right there, 1260. We could go below 1260, but this is the area that you'd be looking for. If we're able to regain 1260, if we go ahead and lower, we challenge below, This would be key on 2 hour to retain this 1260. It's going to be depend on how hardcore they go with TLTR, and I don't think they're going to change interest rate guidance. If they do that, then we're taking out these lows here. It's just a matter of how much more follow through we would go with at that point. Let's go move into the 2 hour. You can see that right there. The two key areas are going to be 1253 and 1235. So let's go mark this off. Unless they go full TRTO. On the upside, it's going to be 1343. 1343. No changes, you can see right here, with the key being a daily close above 1360. But like I said, if they go full TLTRO, which they pretty much expect, and they were to change interest rate guidance, then we're going to go to new lows. And I think we'd be, going down there to the 1160-ish area. That would probably hit by tomorrow. But that'd be a huge change. At that point, you'd hear people going on about 108 and just about, and 110 would just be a pause before you get to 108, if that were to be the case. But I don't expect them to change interest rate guidance. Let's go on and move on to the cable. Well, you can see here we're kind of stuck in the middle here. We had 3180, and we got up as high as 3186. We're going to keep. We're stuck in a tight range. We'll just move this to 3194, and you can see it coming right across it. You see that? I'm actually going to mark that off. Support's going to come in right here at 3128, right there. Let's go move into the Aussie. Well, we went there with this area 70.18, and that's actually held the market in check. And until we take it out, that's going to be the support there, 70.18. And the market held just above that 70.18. You can see right there. The low is what? 70.20. We saw a little bit of a rebound, nothing huge. And then on the upside, we had 70.64. Well, we haven't even come up there, but we can move that a little bit higher right there at 70.68. 70.68. It hasn't made a move that much higher, but that would be coming in support. Resistance 70.68. So just a little bit higher here. And it's going to be, I mean, it's just a quiet, I was going to say it's a quiet session, but it's been relatively quiet in FX for, some time. You can see how quiet Euro is trading right now here at 13.10. We'll move into the dollar Swissy. And look at this, we are just staying very, very quiet here, but still well bid right at here. Just like some of these other pairs, not seeing a whole reason to change. We are holding. We put this up at par 63. And that's where we came up with that, because that's the 78% of this move. We're going to mark that off. So we'll keep this at the 99.63. And as far as support, par 20. Remember, we had that par 21 as that area that the market was going to have a tough time to get beyond. And it simply couldn't. There it is at par 21. That'll be the support here for now. A little bit right there, par 28, but it's our intraday support. If we see that dip, is going to be par 21, the old resistance level. Moving on to the big mover of the day. Yesterday was Bank of Canada. And this is why you have to be careful with this dollar CAD, is because once it gets going into an area, look at this. And I started looking over time, going much further back to see if I could see similarities as to way it would react. And you can see here that it'll stay stubbornly strong with barely even a pullback. I mean, you'll see a good March and then just barely a pullback. So there's a lot of problems that the Canadian economy is run into. One of them also, remember we talked about that yesterday with the I think it was the barley with China, and it's just one on top of the other. Now the crude oil, I kind of have questions in regards to that. Some people are pointing out because crude's been so strong, and then I saw where Warren Buffett, remember he had bought into part of those that oil fields. Um, so I have a problem with it looking in that sense, but things have slowed down. Tough economic numbers, and also the quote unquote uncertainty out of the Bank of Canada. There is some good stuff there, but once again, this type of market, once it gets going, it just doesn't relent at all. You see this, it's just, and this is on the daily chart, it just continues to go higher. The only reason I'm babbling on about that is because you have to be careful trying to short this. I mean, I shorted it from basically almost right there at the top, and it paired back. But I tell you what, I could have hung on a little bit longer. But my concern is, as I was thinking, is wow, you know what? The Bank of Canada is even saying, uncertainty as far as forecasts. And I know how this market has really done some yeoman's work down here. That's what I'm saying. Although it's rallied quite a bit, we really had the opportunity to really crash out, which really, kind of, I never hold my positions long, kind of upsetting that I was long actually from 31.21 down here. But it looked like we were going to really rotate. Remember how we couldn't get above here and we couldn't make any real moves up in here. And it looked like we were really going to start crashing lower here. And this market came down. Now we've come back, a good ways. But look at this. We did some good work down here. I mean, this is really some good solid work here from a technical perspective. So this really opens the door that we can push much higher. And I said, man, I don't want to get stuck short and then say, man, how could I have thought about being short? So the point is, we may see the dollar pair back just a little bit, but this market is really open where it can still push even higher. Okay, so be careful with this market. So that being said, where's resistance going to be? The thing is if you get long, let's say at 34, 35, 34, 20, and the market pulls back, you can feel fairly comfortable. Eventually, you're going to get your money back. You can't say the same thing to a certain extent of being short. You get short, you might be looking at another 75 pip run here. The real resistance comes in right, I guess, right around there at 35. You can see that right there. Should see a nice reaction on that 35.17, but really it doesn't come in till about 35, potentially. Right there, 34.98. I think you have to be careful with this market. I took my little stab at the short side and made a few dollars, but I don't know about this. The dollar's still staying well bid, so it's going to be 34.98. On the support side, crude oil is still staying fairly well bid here. That would be the one flying the ointment, but just only a partial flying the ointment. Support comes in at 33.74. 33, probably lower, just a hair bit. 33.71. 33.71. This is a market you really have to be careful being short. I would not want to play this market short. We've done some good work here, even just recently here. When you look at the dollar peso, and you have an inverted hammer, then you have a hammer coming right into this 1921, and then the market really started working on it. It had multiple opportunities to pair back, and it just kept pushing along. It keeps pushing along. I wouldn't be surprised one of these mornings to come wake up and then see this thing up. Probably didn't happen much in the European session, but to see this market jump up a pretty good chunk of change. We've already come into this resistance right there. You see that? 1940. Right there. We get above that, and this market's really going to start trying to press, and stops are going to end up being hit. And that came in at those highs, which is 19,399. Just call it 1940 for all intents and purposes. That's where the resistance is going to come in. You can see right here, you can see the close and the open, and right here, this market. And look at here, that's just for right now on the short-term basis, it's going to be 1940, and I would not want to short this market. Support right there, 1932.4. Actually, at the time, that was even resistance yesterday. Let's move into crude. This crude is holding up like something else. I mean, the only thing I can think of is they're hanging on for that China deal, because the crazy thing is the OCD even continues to wind down expectations and of growth, and here we are. Look at this crude oil just holding up like a champ. I mean, if that's not a head scratcher, I don't know what is. But and if you think about this, look how well this is holding up. And the dollar CAD is still moving higher. So when this thing weakens, what do you think the dollar CAD is going to go and do if it does weaken? Well, no changes there. Look, 56.48. That 56.48, we just have that holding this market for right now. We had 55.15. And yesterday's low was what? 55.29. Other than this level down here, the fit we'll keep at 55.15. And this worked out well too, the 56.48. Actually, both of them. I don't see anything pressing here. We're just basically just hanging around here. Look at this. It's been in a very, very tight range for crude itself. So no changes here on crude. But if we do slip, what the heck do you think the dollar CAD's going to go and do? We'll move into the dollar yen. Well, on the downside, we had 1164. And the low's been 1158. We're going to keep this 1164 for right now. Actually, we can just move this based on this little close right there. Just 2 pips lower, 1162, but we figured there'd be some decent little bids down there, and there have been, at least to cover shorts. We have not been able to break through, but certainly we know that this market is itching for the 1243. At least on a short-term basis, it's going to be 1197. So we'll just tighten that up a bit. You can see here U.S. yields continue to move lower. They were at 272 yesterday. Now look at 268. So that's going to take a little bit of wind out of the sails, but not much. Dollar yen still well bid. So we'll move into the Aussie yen. We found some support here at that key level, that 78.36. We actually had it only to 46 yesterday, so you're able to go and take that out and come down here. And we'll go with 78.36 for now. But you can see the importance of this level here coming across. I thought we might be able to jump up here to about 78, 78, and then rotate lower, probably towards 55. Nah, it hasn't barely even budged at this point. And there's some talk about the Aussie now finally starting to tire out with this, unable to make that move much lower. And I'm talking about the Aussie dollar and how we might get a little bit of a rebound. That probably might make a little bit of sense also ahead of the U.S.-China talks, or what they think may be a resolution there. So on the upside, it's going to be right there coming across. You see that here? That's going to be 78.91. 78.91. We have this key level here, but just to push some stops a little bit, so we'll go with 78.91 for resistance. And let's move into the cash dollar index. Well, we got that close above the 96.81, and although we pushed a little bit higher, it's pretty much stayed in place. Obviously, what's going to be a key driver today is going to be the ECB. If we go full TL, TRO, and the whole works, boy, this thing could really push higher. So how much higher? How much is higher? Higher? Um, we'd have to be looking at right there, 97.42. That's really only if the ECB really goes whole hog. And there's even a push up in here to 46, but that's still a long ways away from here. Let's go and take a look here at the 2-hour chart. It's going to be right there, 97.24. 97.24. And that would just be just a key area for them to react to on a 2-hour close. Doesn't mean they couldn't push even higher than that. I think the real support's going to come here at 96.52. If for some reason we saw a good rebound here, there's some support here, but I think they try and press those stops, and it'd be 96.52. If we saw some kind of a rebound here in the year, not expected, but just have to be ready for that. We saw a nice little pop back here in the gold market. You can see that here off that 1281. We're still mired in here. Look, if the ECB goes full TRTO, full TLTRO, then the dollar strengthens. We can go and move down there to that 1275 to 38%. So that's going to remain in check. Obviously, a lot of things are going to be dependent on what happens with the ECB today. As far as the upside, yeah, no changes there. So it's relatively simple in the sense that the analysis here, we're looking for 1275, which is the 38% of this entire run here. Right there. And on the upside, 1293. No changes there. Here with gold. From here, we'll move on to the bonds. Obviously, this market can be impacted by what happens with the ECB today. I just don't know how. It's not a market I would want to touch at all. But on a short-term basis, we'll go right there. 66.37. 60, so about 30 ticks away. Support comes in right there at 65, 63. We finally dipped back here in the DAX. I'm sure those OECD readings didn't help matters either. Well, we've got our support here at 506, and we're currently 525. For right now, we'll stay with the 506. Everything's been relatively the same, and our resistance was 636. Well, we've been gently moving lower and lower. We'll go with this 506. We're going to stay there with our technical levels. And the euro's just hanging around this 1311. We priced in a lot on the ECB so far, so the key is going to be if they go full on. But we'll be looking, as I mentioned here, as the key levels here at 1235.53, and also on the upside 1343 with the key daily close at 1360. If things were to change around, but we will see. And then correspondingly with the dollar index, key area here is going to be 96.52. With that, I'll get this posted. Thanks for joining us here on the European crossover webinar. And we'll see you a little bit later on for ECB.